All right, many thanks to Bob Pisani. Now let's get to the other big story today. It looks more and more like Obamacare is failing so badly that a bailout is already in the works for the nation's biggest health insurance companies. And that's because of what many are calling the perfect storm. Not enough young people enrolling, too many older and sicker people signing up. Also, there are too many errors in the reporting back end of the healthcare.gov website. Today, the administration finally admitted to an appallingly high error rate in that data. And according to a new poll, the public, by 65%, overwhelmingly opposes a federal rescue for the health insurance industry. You know what, folks? One bank bailout 5 years ago, more than enough. Thank you very much. All right, so let's talk about all this. Here now is Independent Women's Forum senior policy analyst Hadley Heath. And also with us for the evening are Friday free marketeers, Democratic strategist Tracy Seffel, Lenwood Brooks, policy director for Public Notice, and our great friend, CNBC contributor Jim Pethokoukis of the American Enterprise Institute. All right, good evening, everybody. Heather, Hadley, let me begin with you. What is up with this? What are they calling it? A corridor. They're calling it a corridor of assistance for the insurance companies. It sounds like a bailout to me. I don't like it one bit. You tell me what's going on here.
Well, the most recent proposed change goes back to those canceled plans, Larry, when the administration announced a fix for the plan cancellations that many states have adopted. That means those plans can be back on the market for another year. That means those enrollees are not entering the Obamacare risk pools, and there's fear on behalf of those insurance plans that the pool will be much less healthy than expected. So the change is now for the federal government to open wider that spigot of payouts in a reinsurance program that's supposed to last through 2016.
But we've known this. All right, what's new here is the switcheroo from the president. Okay, I get that. But I don't think people really knew going back that in the fine print of this bill was essentially a 3-year potential rescue of the insurance companies if they don't get enough revenues and they have too many claims. I mean, what do you expect if you're going to have a special spot for processing the sick and the elderly? God bless them. I'm just saying you should have known that this was going to come. And the polls have said the young people don't want this thing in the beginning. I don't think people knew, Hadley, that this was in there. And now it's being accelerated. In fact, they're loosening up some of the regulations so that the money can be channeled into the insurance companies fast. Now, why is that not a bailout? Why is that not reminiscent of a bank bailout?
Well, again, people supported Obamacare. I said this on your show on Monday because they believed it was a safety net program. And now we're finding out it is a safety net program for the insurance companies. It's corporate welfare for the insurance companies. So that's a disappointment to people who didn't understand that this 3-year program and other risk adjustment factors in Obamacare were going to be essentially payouts to the insurance industry that agreed to go along with many of these regulations, hoping that they would get millions of new customers because of the individual mandate. Now insurance companies find themselves essentially in many ways the marionettes of the Obama administration.
Jimmy P., I have no brief against insurance companies, okay? I do, however, have a strong brief against corporate capitalism and cronyism. You tell me what's going on here. Do I have this story wrong?
Now, listen, I mean, the point was supposed to be that some insurance companies which had really good risk pools, better than expected, would subsidize those companies that had really bad risk pools, right? So this is going to be budget neutral, not involve the taxpayer. What they did not anticipate, and I think maybe they should have anticipated, was that this wasn't going to be an isolated problem. This was going to be a systemic, industry-wide problem. So then who comes in? The government. I'm sorry, did I say the government? I meant the taxpayer comes in. So it's absolutely a bailout. Why? To make sure those insurance companies don't flee this program after 2014. Because if they start fleeing the program, the whole edifice begins to collapse. So yeah, absolutely it's a bailout.
All right, so as of Monday, by the way, I mean, as of Monday, there's a good report from the New York Times and others. As of Monday, they're lowering the so-called individual threshold. It used to be $60,000 losses, and then the government would come in and help them out. Now it's only $45,000. The enrollment is not going to favor the young people. This is a Democratic thing. Why are you Democrats always in bed with these big corporations and this crony capitalism and these big trade union labor? Why can't you just play it straight?
And this is the same argument we're having over in the budget world where we don't want to close corporate tax loopholes.
I want to close corporate tax loopholes. I just want to lower marginal tax rates on the other side. But let's stay on message. I don't want to go. I want to know why this bill was written in such a way as to essentially bail out the insurance company. You know what? I'm going to bet that not 3% of the voting population of this country knew that that provision was in the bill, much less triggering it in the earliest days.
Well, there's several things here, and I'm glad that Jim mentioned the budget neutral element that the CBO has ascribed to this, because that's a significant, that's real. So when we talk about the risk corridor, and bailout, I think, it can be used in a lazy way, and this is an example of that. It's not a bailout, it's a safeguard. There's protections in place for businesses to, they're going to benefit in a way that allows them to, guess what, hire more workers.
Right. And wait a second.
Larry, it's stimulus. I appreciate the novelty of the argument.
Lemon Brooks, I get it. Look, the insurance companies were all for this bill from day one. So were the drug companies, so were a whole bunch of them. Why? Because they saw a lot of new customers. Fine. I'm in favor of new customers. I'm in favor of profitability. But I am not in favor of the federal government coming in to cash them out of a difficult situation where the revenues won't be sufficient, where the claims may be much greater than they thought because of this whole business about pre-existing conditions, which was Obama's original hypothesis for this thing. And if they're not making enough money, then they're not making enough money. Then they have to pull out of the whole story. Why can't they? Why do we, the taxpayer, have to bail them out?
Larry, that's how it should be. But insurance is about the law of large numbers. You have to spread risk over space and time. And what's happening here is so few people are enrolling right now, you can't spread that risk. And if the young people do not enroll, it doesn't work with the cost. So that's the real issue here.
Hadley, you know, let's not forget also that this is not the only payment from the federal government, right? There's subsidies to make it more attractive to buy these insurance packages, okay? And those subsidies run through the insurance companies. So they're going to get a little vigorous out of this before it's all said and done. Once again, I ask you, why are we singling out and helping so much this industry?
You know, it's interesting. President Obama was against the individual mandate before he was for it.
Right.
And many supporters of the Affordable Care Act thought of insurance companies as the big bad villains in our health system before they're now in favor of supporting them or propping them up through these risk corridor payments and the subsidies in the exchanges. So it's an interesting turn of events.
Jimmy P., a lot of insurance companies are pulling out of these markets, which is probably the sensible thing to do.
Well, that's the point. I mean, the point, listen, this was supposed to be, as we said, budget neutral, because they didn't expect it to be that bad. That would be a company here, company there. No, it's throughout the entire system. So that's why it may cost, I mean, I don't know what's going to be. 500 million, $1 billion. Now, I realize that when we're talking Obamacare, you were talking $1 trillion like they're nothing. But you know what? That's $1 billion subsidy to these companies. What is a bribe? It's a bribe to keep them from leaving this program. Because if they leave the program, well, there is no program.
See, that's the trouble with this story is that Obamacare may go down before it even starts up. I think that's the issue. And I think that's why they're rushing this past week, the Obamacons, to open up the regulations and to lower the thresholds so they can start putting money into the insurance companies. Because we know that the young people are not going to sign up in droves. They're going to get, far less than that. And therefore, we got a problem right from the get-go.
We don't know where that's going to go, but we do think it's going to go up. You said we don't want to rush it.
Which is going to go up?
We're going to see those young people numbers go up.
Really?
Absolutely.
After all these polling today, we had 4 college kids on the program last night. I didn't hear that.
Well, the world hasn't ended despite the broken website. But let's remember one thing. You mentioned rushing things. Let's do the opposite. Let's go back 10 years, 2003. The Republicans did what? They voted for a risk corridor in President Bush's Medicare prescription drug plan. This is not.
I wasn't in favor of that. See, that argument doesn't hold water with me. In other words, if Republicans have bad policy, I'm going to call their butts out on that, too. If you know me, I am opposed to crony capitalism. I don't care which political party. Lenwood, let me just finish with you. If the public gets this story, now we are using a story that was on the front page of Investors Business Daily, a great newspaper, but only 300,000 or so circulation. I'm going to predict, I want to get your final thought on this. If this story gets out, these risk corridors and these subsidies and these bailouts, I think all hell's going to break loose because the public polling here is unambiguous. They don't want to go through another bank bailout, which is how they're going to see this.
There's no question about it, Larry, and that's the real concern here. Americans rage when they find out that so many of these things in Obamacare are covered by subsidies, and that's wrong.
Including saving the companies.
That's right.
Including saving the company
We're calling
profits.
it a private marketplace, but it's really not. It's subsidized so much.
Right.
It's the
How
government.
about banks, insurance companies? How about law firms next? All the popular companies. We say.
I've got broadcasting. All right, I got to get.
Everyone here does know that the insurance companies also pay back to the government.
We don't know.
No, they're not paying back.
clear.
They're not paying back that $1 billion.
That's right.
There are provisions.
We don't
We're
know
talking
that.
about the risk
No,
pool.
because it's companies offsetting companies, but it's too bad. So that money's going to run to the taxpayer.
All right, hang on. You're going to come back. You're going to get another whack at the ball. Hadley, Heath, thank you very much out there. Jimmy,
Thank
Tracy,
you.
Lenwood's going to stick around with us.